Bloomberg Audio Studios.
Podcasts, radio, news.
Ed Hyman joins us now, Chairman, Evercore ISI, and of course out with a must-read note. And it's almost comfort to me, Ed Hyman, to see your note and just observe that, the basic idea. You start like Alan Greenspan with trucking. Explain why at Evercore ISI, where everybody hangs on every chart and every paragraph, why does Ed Hyman start with a trucking survey?
Because it's the most important thing to start with. So we survey about 40 different industries. And you might ask yourself, which one correlates with the economy most? And the answer is trucking. The surveys overall, trucking, retail, autos, etc., overall beat trucking by itself, but trucking has the most.
Right.
And so, and that survey also has hooked down. I'm looking for message, signal.
Well, can you signal now the certitude of a recession or the when of NBER recession?
No. Yeah, I've been on the recession kick too long. So I'm trying to
wean yourself off of that, right?
not wean myself off it. I'm just trying to, my job is to help our clients. And this has not been helpful. Now, at this point, the logic that monetary tightening, a la Milton Friedman, would make inflation go away has worked. And the yield curve being inverted should slow the economy. And we're getting some evidence to slow down. Mm-hmm. And so I'm saying I should relax a little bit.
Okay. So what do you think, we're going to hear from the Fed in a couple of weeks. We're going to get some economic data today with jobs and tomorrow with the labor report. How do you think the U.S. economy is performing these days?
It's okay, a little spotty.
Okay.
Some places are just booming, not doing well, not holding up, not resilient. And some places are softer.
Right.
Like our trucking survey has gotten a little bit weaker, and construction is a little bit weaker, and some retail, particularly when you get into the lower income categories, are a little bit softer. And the employment data, which is the key, everybody knows that, but it's showing some signs of being softer.
We saw that with ADP, folks, and the markets move on it. Futures flat. Now futures, S&P futures negative 13, NASDAQ down 0.6%. The VIX was a 20 level, goes out to 21.22. The Sweeney yield 3.72% in 3 basis points, and the 2-year yield a little bit of disinversion here, a positive 2-10 spread. I haven't said that since the Red Sox last won. The real yield 1.67%. Paul, pick it up.
And talk about we're going to have the Fed presumably cutting rates and maybe substantially starting in September. What does that mean for the U.S. homeowner? I mean, the mortgage rates have been high, but not, and it comes to the point where nobody wants to sell their home because they don't want to go to a new home with a higher mortgage rate. Yeah. How do you think the housing market's going to react to what should be a declining interest rate environment?
It'll be good. Housing has had a real problem with lack of supply. And I find that everywhere.
Yep.
And we do a survey of home builders.
Of course you do.
And that picked up quite a bit.
Okay.
About 6 or 7 points on a 0 to 100 when mortgage rates came down. And then this week, it dropped 2 points.
Okay.
I don't know if it's noise. Lumber came down, so I'm trying to connect the dots. Like it might be a little bit of signal. But I don't get the feeling that 25, 50, 75, 100 basis point drop in mortgage rates, in the funds rate is going to do a lot.
Yeah, you've got a nodding acquaintance with Bowdoin University. I should say Bowdoin College up in Maine, but the real heritage is University of Texas. You have an inherent prism into the boom economy of Texas, of Arizona, and the rest. Where do you see that 5 years from now? Where do we just continue to see this migration from California, from New York, from Illinois, and the rest?
Probably. The tax situation's better. There's also a movement particularly of young people, like the University of Texas,
Yeah.
To get away from a woke environment in the Northeast, frankly. And that's
Right.
probably going to keep going on.
You've kept politics out of your newsletter, I would say, more
Yes.
than anyone else. You've been really, really good about that. So I'm going to quiz you now on how you
Let's keep
write.
it out.
You don't walk, Lisa. Hold on to him. He's not walking out of the studio. Ed Hyman, how do you dance around this unique presidential election to give advice within your newsletter to your clients worldwide?
So it's a dance, and Evercore has its roots in the very democratic group of people as founders.
With Roger Altman and the rest,
Roger
right?
Altman and Ralph Schlosstein.
Yeah.
And they're terrific. And so I have to be a little careful as a Republican. You're not. It's their firm, and I don't want to get in the way. But as we all know, it's 50-50.
Yep.
And so it's too early to try and figure out what the economic
Right.
implications. Trump is giving a talk today here in New York at the Economic Club, and we'll pick a little bit up from there. I'm sure you'll be there, but
Yeah.
Big traffic. That's all I know.
Ed, we want to come back and continue this discussion with Ed Hyman. Are you a bull or a bear right now? Can you add cash to a belief in stocks right now?
my technical analyst, Rich Ross, who's been very good, he was very bearish. Now he says he's balanced. I don't know what balance means.
Right.
So I'm not particularly bullish or particularly bearish. I own a lot of stocks, own a lot of real estate. I'm nervous because things seem like they're too high, too expensive. It's not a good answer for you, Tom.
That's okay. We'll keep you on anyways. I love doing this with Ed Hyman. Everybody thinks he's like on the phone with Jay. No, he's looking at, he's in here literally looking at claims as we start. Unit labor costs came in a little bit lighter. What do you say about wage growth moderating? Nominal GDP comes down. And then what do you say about the real wage? Are we going to get a negative real wage?
The wages look like they're really slowing. And inflation looks like it's really slowing. And productivity has been really good. And I assume it got revised up a little bit because the GDP was revised up.
Yep.
I don't have the revisions yet.
Should be out.
They'll be out in a couple minutes.
Yeah.
You see
And-
how Hyman, he's,
Yeah.
he's killing me.
And so unit labor cost, before the numbers was 0.5 year on year, just an increase of 0.5. And so inflation could be down to 2% without any trouble. And by some measures, it already is down to 2%.
Yeah.
So that ship has sailed.
So is the Fed late in cutting rates, Ed, do you think? Or because a lot of folks out there saying the Fed should have been cutting rates for months now.
They're smarter than I am.
Are they too smart?
Could be too smart. I think the Fed has been doing a pretty good job, and I'm generally critical of the Fed.
Okay.
But either by luck or by skill, they have the path set now for cutting rates.
Mm-hmm.
And we got claims this morning
Right in line.
so low it makes me have a headache.
Yeah.
And so they got different mandates. So I
Right.
don't necessarily think they should have. We'll know better the answer to that question. I do think that they were way off on raising rates. The transitory story I thought was
Right.
pretty bad.
Is it harder now, Ed Hyman, to do the craft? He's got this little tall table he stands at with a black, one of those markers that if you get on your shirt, you throw the
there
shirt
forever.
out.
Yep.
And he's marked. Is it harder to do it now because of the mystery of technology, the mystery of productivity, the polarization of the labor force in America, the haves and the have-nots? Is it harder to do now?
I don't think so. It's always been very hard to do.
I agree with that. Yeah.
So I'm not thinking it's any harder to do than it has been in the past. It's just been always, very, very difficult. In some ways, the hardest time was in the 1970s. When you had the embargo, you had wage price controls, you had inflation going nuts, you had Nixon resigning.
Yep.
I mean, it was pretty.
What are your clients?
tough.
What are your clients asking you these days? That's maybe unique, or just what do they really want from you these days?
I think they want a steady hand, a unbiased analysis of what's going on, and so I try first to do that. You have the data on the ADP came out.
Yep.
It's 0 calories. It doesn't have any information in it whatsoever. It still moves the market, and we still look at it. Claims, on the other hand, are very important.
Right.
Yep.
I want to go to the Economic Club of New York and the heritage here, Paul, and to paint the picture, folks. In the old days, you're in a huge ballroom in New York with the elite meet to greet, and the fancy people are up on stage trying not to eat until the speech is done. That's a tradition, and you're starving, and you're looking at your food going, when do I eat? And off to the wings, the left wing and the right wing, looking out at the people, the audience, are two worthies, and then with trepidation, the speaker knows they're going to ask questions. And often, and to the great joy of the Economic Club of New York, Ed Hyman is one of those worthies. You, Martin Feldstein, and others would ask really tough questions. You do that today with former President Trump. What is your question today at 12 noon to Donald Trump?
What are you going to do with taxes? Would be the main thing I would want to know.
Explain the distinction of the Harris tax policy as
I'm not sure
proposed
what it is.
or trial ballooned versus the Trump
It's
tax
too early.
policy. Fair.
It's too early. In the news right now, there's a debate. They say that Trump wants to take the capital gains tax rate up to 39%. Maybe it's Biden wants to take it up. And Harris wants to keep it at something more like 28%. But, as a conservative, I would rather keep it at 21 or 22%.
Explain how the taxation of unrealized gains. Paul Sweeney bought NVIDIA early. He's got a big unrealized gain, and he's not selling that puppy. And select individuals, including the senator from Massachusetts, wants to tax those unrealized gains. How does that harm not wealthy people?
Well, I think it harms everybody.
Why?
Because it hurts the whole capitalistic system. And so, that's one of the things that I would find the most discouraging. It also is impossible to administer. So I don't think that's going to make it, but it definitely is low on my
So broadly
list
defined,
of things that'd be good.
Broadly defined, where would you like to see the U.S. tax system go over the next several years? Because obviously, as you well know, there's many different different thoughts on that. Where do you think it should go?
I'm happy with it right now.
Okay.
I think we're paying enough taxes, and so I'm not interested in seeing taxes go up. And I don't get this sense that the Harris Democratic group really are pushing for higher taxes either. There's some parts are, but I don't.
Well, how about? I would love to get your perspective on the debt and deficits. I've been hearing about it my entire life. When do I have to worry about it? Yeah, you too.
Well, but Ed, you were directly involved with this with Pete Peterson, Paul Tsongas, Sam Nunn, and the others. I mean, some would say they've been crying wolf for years. We're still here. But are we at a tip point now that those people talked about?
So I don't think so. But I think about it all the time. I had a deep conversation yesterday with Lee Cooperman, who's extremely upset about it. And I said, Lee, bond yields are so low and the dollar is so strong. Those are the two things that would make you say, this is now.
Right.
Okay.
And it's not.
Take your work into John Gollob's work at Evercore. We've got to go here, Ed Hyman, but fold your economics into the Evercore ISI equity call.
So we've been on the equity call. We've been pretty bearish on the stock market, and so that's where I am right now. Mm-hmm. Frankly, we have a strategist and a technician that have different views.
Well, that's good. That's classic. That's Ed Hyman view.
Well, no, but I'm just saying I listen to them.
Yeah.
So right now the economy's fine. Earnings are good. Inflation's coming down. Fed's going to cut.
Right.
And it's okay.
Ed Hyman, thank you so much for being with us today here into the Jobs
nice
Report.
to see you.
Tremont. Nice to see you as well. And Ed Hyman with Evercore ISI, dancing around the politics of the moment. We'll speak to Mr. Hyman here through the autumn as we can.